temps for this time, but we did have a pretty cold blast. Winter forecast is out for the United States due to the La Nina. The cold temperatures are supposed to stay in the northern tier states, which is where they belong and where you'd expect it to be, and a little warmer than normal temperatures about halfway down from the Canadian border, Texas to southern states, and we actually get some of it here in Kansas. Stay stressed due to the lack of moisture in the forecast. And again, hard red winter wheat, even though we export half of our hard red winter wheat to other countries, is an important food staple around the world. It's what bread is made from. The soft wheat, winter wheat, is what you send soft winter wheat to the Middle Eastern countries. It can cause riots, and we have had government changes in Libya, Tunisia, Egypt, and perhaps a government change on its way in Syria. And the Syria situation is like the others. People aren't afraid to take a bullet, and when people aren't afraid to take a bullet, it's survive. So the Middle East and hard red winter wheat prices may not affect us directly at the grocery store. A new dynamic to what's going on in the Middle East. It's a holiday week. Most people are planning on shutting down at noon on Wednesday. I mean, after the 7-year auction, I doubt seriously if the buyers of that when issued piece of paper and the people that are trying to support the market, support that piece of paper, are going to do anything big. So outside edges of the market, I would say 131. Probably easier to take out 131 if the selling gets started in the E-mini than it is to take out 130. The option play, looking the desire says this market will close between 130 and 131. And if you look at where the central price is, that would be 130.16. So it's well to get back to 130.16. Started out yesterday thinking we might get above 24. Given what's going on right now, a little weakness from the E-mini, getting stops above 24 looks reasonable to me. Resistance starts at 24, and really still have this idea in the back of my mind that we can sell 27s to 31s, but a lot will depend on what happens if we can get up to 24. So 20 to 24 would be a sell band, and then assuming the rejection of 24, followed by 28 to the buck. And then on the support side, 8 to 12 is pretty good support, followed by the buck to 04. And when it's all said and done come Friday, my guess is we're going to be at 130.16. We do have news on the half revised GDP, first time 2.5%, with a deflator at 2.5%. It's old news. It hit the market last month, so it shouldn't have much impact. These numbers typically have been revised lower, and but the third quarter is showing some increases in economic activities. So for the last couple of months, the economic activity news has been coming higher than the forecast, which might mean that the GDP 6 or 27, then the E-mini can rally, and that is what we would expect to hurt to hurt the financials. Got a 5-year auction today. That's usually the one to pick up interest in the 5-year and the 7-year. It's always easier for a broker-dealer, to move paper at a higher interest rate. And I don't see that there's a lot of news happening between now and the end of the week that could really negatively impact this market past an E-mini, coming back and rallying strong. The news out of Europe is pretty quiet, not much out of Asia. Probably the biggest news out of Asia is that the current Taiwanese government said they could work for peace with China, which is what you'd expect a politician to say. Hell no, we're going to war with you, China. Come on, let's get it on. The biggest thing that will keep China out of Taiwan is that most of the factories and most of the investment and most of the high-tech stuff where China excels on assembly, the brains, the smarts, the money that did it first came out of Taiwan before it came out of the United States. So China can make a lot of noise and rattle their swords and push Taiwan to the edge. With the U.S. owing that much money to China, it's doubtful that we would get much more involved than rhetoric. Certainly, not like it was in the 50s or 90s. The U.S. will not sell Taiwan advanced weapons systems. Guess they're going to have to build them themselves. So, not much news out of the Asia. No news to change things out of Europe. The ECB continues to support Spanish and Italian debt by buying their issues directly. So we got a pretty quiet week coming in news-wise, and once again that should foster stability in both markets, with the first read on the Christmas season retail sales coming this Friday. Now, I've seen major chains opening their doors anywhere from 10 to midnight as opposed to 6 a.m. on Friday. So we'll probably get a little better feed on store traffic, but I don't understand how anybody would get up or why anybody would get up and go shopping at 10 or midnight for Christmas, but what in the hell do I know? There's your 28, where the market has rejected prices. Here's your 8 to 12. And then here's the 00 to 04. See, 00 does not make an 8, right? And here's your 16. So that's where I expect it to close on Friday. So I'd like to see him go get stops above yesterday's high, above 24 right here, then reject that area before I put something on. Can buy 9s to 13s. And can definitely buy 1s to 5s. So we'll see how it goes. Meaning buy local from your local stores that may have imported goodies from all over the world, or buy local and not over the internet and buy American products. So, Don? I didn't think they made anything Florida past coffins and headstones down there. So there's actually a manufacturing base in Florida, huh? I'm just kidding. A little gallows humor there. Oh, and real estate too. They make homes down there for people fleeing the cold weather up north. They don't make oranges in Florida. Mother Nature makes oranges. Just kidding. There's actually a pretty big high-tech industry in Florida, jet engines, etc. Phosphates, but I was kidding. Having a little fun at Don's expense. For those of you that are looking for something that is mindless, outside-in trading is it. Now, it is possible to lose money knowing that 70% of the activity is between those two yellow lines. It can be done. But generally speaking, markets move sideways. And once you make the bracketed call, which is what we are doing today, and once they get stops outside of the obvious and you settle in the bracket, you can work this yellow line back and forth many, many times. And you should expect to be right 2 out of 3 times. Can't guarantee that, but even knowing that the market trades between those two lines 70% of the time, that's not enough. You've got to understand the general overall direction of the market. You have to understand its bias, and you have to look for some form of deceleration. But trading at the value area highs and lows, you have something going for you. You got structure, you got the market profile community with you. Trading at the mode or the mean, you've got less going for you. You actually are making a directional call when you take that trade in that area. And if you're trying to predict the future, most people are right about 50% of the time. And when you go in and check the trades where you had your setups in the mode or the mean area, you're going to find that you're probably right about half the time. And one of the things when people first came into the room early on, good traders, including Bill Thomas and the rest, they found that when they back tested and checked out what was the difference between their winners and losers, their winners came out of this area where they got their expectations, and their losers off the RTF came out of this area. So you got a lot more going for you if you'll trade the markets in these two spots. Well, I think you see that, Rob, in the knob spread, and I think that's why. I mean, there's 12 to 13 handles now between the 30-year and the 10-year, and when the knob spread gets down to about 9 right now and gets up to about 13. Back in the old days, it would get down to 0 and on a stretch would get out to 5. And then right now you're looking at about 9 to 13 on it. So you're seeing Operation Twist take the knob from this area to this area. Now the underlying strength in the market is that the Fed has set the interest rate at 0.25% at the window, and yesterday's 2-year auction got off at a yield of 0.28. So that rate right there, and the Fed's stated policy of keeping it this rate right here at 0.25%, at least till 2013. This was probably going to hold us in a range. No, Bill, I think if you're trading in this area right here, you are making a directional call. So looking for a B or an S or a trending trade, a trending setup would be the trade of choice in that area. I mean, the market has tested the value area low or high 2 to 3 times, and you catch a B or an S. I think that's a better trade for you than the other. Okay, going back and looking at the F1 screen, you just have to maintain a bigger picture on this contract. And what you use the F1 screen, it's to confirm or temper your opinion. And it's all fine and good that we're bears or bulls, but we have to see what the market is doing at potential inflection points. And we knew if we took out this basically 45 area, give or take a little bit, we had a shot at it was actually 82 or 83 off the various screens. That's where the high volume number was. We made 80.50 yesterday. So what stopped us? Got this single print right here. We're also about 100 points off the high. And a couple of things came in at that area. So if I'm looking at this screen, 1260 plus has brought in sellers, and if I look at this screen, say 1125 has brought in buyers. And the issue is right now, can we get down and retest this area? And my guess is probably yes. I don't know when, and it will be news related. We'll get a surprise to the downside on some economic activity news, or we'll see unemployment jump or something like that. And we're getting pretty good numbers out of the third quarter. And like we've said, in October through November, that the economic news is coming in better than expected or forecast, and we should pay attention to that. So right now, say it's an 1150 minus and a 1250 plus market. The Fed likes that. And the Fed, I mean, with all the other problems we have in our economy, one of the easiest ways to give people hope is the stock market is up and holding its gains. And you may not have a job today, but with the stock market up, it means business is good. And there's a chance that you might get a job in the near future. So the Fed is supporting the market pretty well, actually. So definitely buyers below 1100. The market has rejected prices over 80. And if you look for a central price in here, this 1250 to 1125 would be 125, 60 points off of 1260. Puts us right here in this area right here, and that's where we happen to be. So this overall assessment is what you have to continually make, and no matter how bearish or bullish you are, this is the reality. There are sellers here and buyers here. And for right now, we got a central price in this 1182. Let's make it 1190. We'll see what happens. Okay, yesterday's high was 99.75. We had a called sell at 99.50 to 12.01. You were able to pull that trade off uh, in the 98 area, give or take a little bit. The market got up and didn't quite make 99.75. They did not go for stops above 1200. So what does that tell you as a trader about the strength of the market, about the willingness to buy or sell? Yeah. If my job is to go gun and get stops, and I can do that, especially in the overnight, and you got 1200 right here, and it's not. They didn't get it yesterday, and they didn't probe higher this in the overnight session. That would tell you that the market is still, the sentiment is still to the downside, bearish or weakness. So we'll probably get our retest of the 85, 87 area, and then if we can't break that, well, it looks like we've got a central, this area right in here. To right in here, so maybe a central price at 90 and buyers at 85. Got a buyer down here, and looks like we got a pretty good seller in the 96 area plus. So 95 to the buck, and if we get a 20 handle range, maybe 80 to 85 is pretty good support. I don't see anything in the news today that will take us higher or lower, and look to work a trading range. So your first sell would be in the 95 area, and that would be fairly aggressive. Your second sell would be around 1200, and that would not be so aggressive. Your first buy would be in the 85 area. And then the backup buy would be in the 80 area. And I do think the sentiment in the market is pointed lower. The thing that's going to hold us in a range is going to be Black Friday, when a retailer has a chance to go profitable for the year. Yeah, Bill makes a good point right there. In the overnight session, if they couldn't push it above 1200, nobody, I mean, that's just kind of confirming that, the local and the trading community wasn't even willing to venture up there and stick their heads above that trench. So that's where we have it. I'll get the write-ups out on the E-mini right now, and then I'll probably send a test email for the paid subscribers, and I'll let you know when I'm going to do that today, and then you can let me know if you got the email or you didn't get the email, and we'll try to get that straightened out this week, okay? In a bit.